Hey, what's up, everybody? Welcome to episode 23 on season 1. Today we are talking about how do you get rich on Robinhood. There's 3 different ways to do this, or there's there's 3 things that you have to do in order to get rich on Robinhood. And by specifically get rich, I don't mean like rich by the time that you're 65. Well, I guess if you got rich when you were 30, it would still be by the time that you were 65, but just 35 years earlier. However, I mean how to get rich fast on Amazon. Robinhood, not Amazon. Two completely different companies. Anyways, so number 1, you got to invest into highly volatile stocks. Those stocks are going to be the ones that have the biggest uptrends and the biggest downtrends. So what that means is that if you can catch a running stock and then you can short it on the way down, you can double your money. However, because they're highly volatile, which means that they're not as predictable and they're not as steady, so they will go from like $1 to $2 in a day, but they will also go from $2 down to 50 cents in a day as well. So you got to be careful when investing in those volatile stocks. However, if you can predict what's going to happen, or if you can trade them right, you can make a lot of money. Secondly, you need to compound your money as fast as possible. Now, this means that day trading is what's going to make you the quickest money, the fastest. Because day trading, what it is you're going to be in the trade for a few minutes to a few hours, and you'll be out of that trade before the next day starts. So that money, if you make a profit, say you were to have $1,000 account and you made $100 that day, so you had $1,100, all that money, that $1,100 would get reinvested the next day. And so the next day you would have $1,110, and then so on and so forth. It would continue to compound. And that's how you're going to make the quickest money the fastest. However, the last and final is more like a warning, but it's more common sense, is the higher the risk, the higher the reward. So the higher risk that you're taking with your account, the higher the reward that you'll get. So the quicker you'll make money. And that's the way that it works with the stock market. It's typically the lower risk. So the certificate of deposit, not specifically stock market, but just investing and making money off your money, is the lower the risk, the lower the reward. So you can invest in a certificate of deposit at 1%, which really is not going to make you much of anything. If you invested $1,000 into a CD over the course of a year at 1%, you would only make $10. Yeah. So that's to say that the higher the risk, so if you're looking to make, like, in a year, you're looking to double your account, triple your account, quadruple your account, think about how much risk is going to go into that. And then you gotta do a risk analysis and be like, if I do this with $1,000, or if I do this with whatever, $20,000, $100,000, am I willing to lose that much money, and how fast am I willing to lose it? Because you got to run the risk analysis, and all you're doing on the stock market is trying to do capital preservation, which is making sure that you're setting your stop losses right, and you're setting your entry levels right. So it doesn't specifically matter, like, when you get in, when you get out. When you get in, you got to make sure that you're preserving your capital, because that will depreciate super fast. Anyway, so that wraps it up. So the 3 ways, or like the top 3 ways or whatever. How do I get rich on Robinhood as fast as possible? Number 1, invest into highly volatile stocks. Don't invest into the Amazons, Apples, Microsofts, the companies that are pretty steady. Don't invest into those ones. You got to invest into the basically penny stocks that are going to go from $1 to $2 in a day, and then go back from $2 down to 50 cents. So that way you can short it. However, you can't short on Robinhood. Compound your money as fast as possible, which means that you need to day trade or swing trade. You don't need to long-term invest unless you're trying to get rich by the time that you're 60 to 75. And the last but not least is the higher your risk, the higher your reward. So if you go all chips in on one stock, you're going to get a higher reward than if you were to diversify your portfolio. However, it's also the most risky because if that stock was to crash, you would be out of all your money on your account. So anyways, we're going to dive into the question of the day. I got it already set up. I just got to click the next question. And it's loading. Alrighty. What does it mean when a guy won't look at you after a breakup? I think that this means that either... I think there's three, maybe two different things that it means. Either he feels bad for what he did, and so he is ashamed that he broke up with you, so he doesn't look at you. He's embarrassed that he broke up with you, or that there was a breakup, and so he doesn't want to look at you to acknowledge that embarrassment. Or third, he just is socially awkward and doesn't understand that people are human beings. Anyways, that's my take on it. Feel free to let me know what you think in the comments below. I'd also love to tackle any questions you might have, so post those down as well. And don't forget to subscribe. Check out our other video on something about Robinhood. And then check out this other cool video right here. And until next time, thank you for watching. I really appreciate it.